Hello, welcome back to another episode of Wealth in Christ Podcast, a show where we inspire the masses to become financially free while building God's kingdom. On a podcast today, we have Miss Atia Brown. Miss Atia Brown is a well-known CPA and the owner of Savvy Accountant on Instagram. In this podcast, we're going to discuss about taxes and ways to save on taxes for this upcoming tax season. So thank you for being here, Miss Atia Brown.
Thank you for having me.
How are you doing?
I'm good. How are you?
I'm doing well. So what led you to becoming a CPA?
So that story is kind of funny. So I never wanted to be a CPA. I was actually always just really good at numbers and math. And so in school, I was actually taking actuarial math. And that was the path that I was going on until I realized that I'm an extrovert. And so I probably won't fit in with a lot of the people that are in actuarial mathematics. And so I took my first accounting class in college. It wasn't until college that I thought about accounting. And so I took my first accounting class and I did really good. And then I took my first tax class, and that's kind of what started the way. But I never thought that I would be a CPA. I just was always obsessed with numbers.
Wow. And how long CPA for?
So I was licensed 13 years ago.
Wow. That's a journey. That's a career. What a career.
Yeah.
Yeah. So my question, being with your experience, what's some common mistake you see people make in terms of, filing for taxes?
So I think a common mistake that I see people make is overall when it comes to taxes is not having the right knowledge. So they don't know what they don't know, but that leads to them making mistakes. So one of the main things, if we're talking about like W-2 employees, I think the main mistake that I think they make is not filling out their W-4 correctly. So their withholdings aren't correct. And so when it comes tax time, either they withheld too much and they get a huge refund and then they're excited. But what that huge refund means is that basically the government had their money for the whole year. They had an interest-free loan and they're just giving them back their money. So not adjusting their withholdings to suit their situation. I think that's probably the biggest mistakes I see employees making when it comes to their taxes.
Wow. And can you elaborate on what the W-4 form is?
Yeah, so the W-4 form is going to be the form that you fill out when you start your career, your employment. So that's what your employer is going to use to withhold your taxes. So as an employer, they're responsible for withholding your payroll taxes and submitting that to the government on your behalf. And so they use that W-4 to get the information they need. So back in the day, they used to have what we call exemptions. So you used to put either 0 or how many exemptions you had to put. Nowadays, they changed the W-4 with the Trump taxes, the tax reform that happened under the Trump administration. They changed the W-4 and then it's changed twice overall. And so now it's more about what your income sources are. And so you should be withholding a certain amount based on what your income is. And so you fill out the W-4, but a lot of times people don't realize that they should be changing it at life changes. So if you have a baby, if you get married, these are all things that are going to trigger you completing a new W-4 at your job. And there's no amount of times that you can do it. Anytime something changes, you should probably complete a new W-4. So when the new tax reform happened the first time under Trump, a lot of people were taken off guard because they did not adjust their W-4s. And so when tax time came around, they were in for a surprise because their withholdings weren't sufficient in the case. So that's typically what the W-4 is.
Wow, that's quite interesting. So my next question, being a tax law, it changed and like the book is pretty heavy itself, I'm sure it's like a lot of pages. How can individual, employee, stay up to date so when tax season do come, it's much an easy transaction?
Yeah, so the best thing I can suggest is to just try to have a tax professional that you trust, that you can reach out to them and you can see what has changed. Because for a long time, nothing really changed. Like your situation probably didn't change. And so you didn't think that you had to do anything. But tax reform happened and it's been happening a lot lately with the whole change of administration. There's a lot of changes that are happening. So if you don't know what's going on, my best advice is to speak to somebody who is keeping abreast. someone who has to follow all the changes, so they have to know what's happening. If you are an employee and that's not your wheelhouse, you're not going to be keeping up to all the changes. But literally, something just got signed, like put into new law under the Biden administration, like a couple days ago. So that's going to have tax changes in itself. So it's just keeping up with everything. It's probably the best bet is to speak with a trusted professional that you trust, and just go to them with questions. See what is impacting your situation, what you should be aware of, so that you're not caught off guard.
That's great. Um, that's great. What I like to like in terms of like taxes or just information, like I try to like myself try to understand myself a little bit. So I do go to accountant or somebody who's more. And so I'm guessing, how can someone get educated for themselves so they know the right questions to ask to the accountant, so they know this is the right person for them to work with?
Yeah, so that's a good question. So I like to tell people the irs.gov, so that website was created for the taxpayer. That has all the information that you are possibly going to want to know. It's going to take a lot of digging because it is a government website, but all of the information that pertains to you as a taxpayer can be found at irs.gov. So you might want to go there and search things that might be applicable to your situation. So if you want to search like real estate and find out what has happened in the real estate world, if you own properties and you want to know about that effect. As far as questions to ask tax professionals to find out if they're the right fit for you, depending on your situation, I would definitely ask questions on your industry, on your specifics. So if you have children and you want to know about the tax credit, the child tax credit, for example, find out if they work with people with children. Are they aware of the changes that impact the child tax credit? So just ask specific questions that pertain to you to see how comfortable they are. But don't be afraid to ask questions. I don't think there's anything wrong with you interviewing them, just like they should be interviewing you to find out if you guys are a good fit.
That's great. That's great. Thank you for that. Now it leads me to my next question. Over the past year, a lot of people have become entrepreneurs or aspired to be entrepreneur. And I realized that a lot of the content that's pushed out there and that is used to encourage you to become entrepreneurs, like the tax write-off. So I don't know if you could explain what is a tax write-off and how you should go about getting tax write-off.
Yeah, so I like to tell people when it comes to being a small business owner, you have to realize that the tax code was written and it benefits business owners as opposed to employees. That is something that I want a lot of people to take note of and to realize that they have the potential to get some of these tax benefits. One of the main tax benefits, like you said, that people are going to be talking about are going to be deductions. And so deductions are going to come in play because when you're an employee, you are paid your income, taxes are taken out, and then what comes home to you is after taxes, and that's what you can do with it. When you are now an employer, that paradigm kind of shifts. So you make income from selling your product or service, then you have deductions that apply against that. And then that net amount is what you're going to actually pay taxes on. And so because of that, you can imagine that if you have more deductions, your net amount is going to be lower. So the taxes that you pay is going to be assessed on a lower amount. So deductions are going to be what's going to reduce your revenue or what you make from selling your product or service. And that's going to generate what's going to be known as net income. And that's what you're going to pay taxes on. So deductions, I want you to remember ordinary and necessary. So if it's ordinary and necessary for you to run your business and incur a profit in your business, then chances are it's a valid deduction. So you're not going to get a list from the IRS telling you what you should be writing off, but your industry specific is going to have certain expenses that you pay, certain expenses that you incur for you to generate a profit in your business that's going to be reasonable for you to write off. So if you're a hairstylist and you're in the beauty salon, you're going to have different expenses than me as an accountant. And like working from home as a CPA, I'm going to have different expenses. So, knowing what is reasonable for your industry, for your business, for you to incur a profit, that's going to be what's important. So yeah, we're all going to have most likely advertising and marketing and accounting fees, but the salon is probably going to have a lot more shampoo orders and stuff like that they can write off validly in their business, whereas I'm not going to have any of those deductions apply to my business. So it's really just about understanding your industry and what are you spending this money so that you can generate a profit in your business? And if so, then chances are it's a valid deduction for your business.
That's great. That's a great explanation. I like the way you explained that. I
Mhm.
do. I truly do. And being that said, the tax code does benefit business owners or employers. Would you recommend people to have some sort of business, whether it's, owning properties or something so they can take advantage of this?
Yeah, so I definitely think that in this day and age, and especially with the pandemic and everything happening with everything shutting down, people are realizing that having one source of income is probably not enough anymore. Um, Times are changing, and now is when we're, fortunate to be able to live in a space where we can run businesses from online. We can do things without having to have a brick and mortar per se. And so that opens up the possibilities of what we can do to actually earn income. So I think not that everybody should have a side business, but I think it's something that everybody should look into seeing if it's something they can have, because having a second source of income is not something, I don't think it's something that you might want to have. I think it's something that you might need to consider.
That's great. You're right. You're right. Definitely right. Um, Another question I have, and I think is also common, has been common in the past year also, because a lot of people become entrepreneurs, starting a business, is the idea of whether LLC protects you or it gives you tax benefit. So I don't know if you could go more into details of what an LLC is and how it should be used.
Yeah, so a single member LLC, for the government purposes, it's what they call a disregarded entity. So what that means is for tax purposes, it's going to be treated the same way as a sole proprietorship. So that means it's going to be passed through on your personal tax return. It's going to be filed on what we call a Schedule C. That Schedule C is going to be reported on your regular 1040, and that's how that's going to be reported. So in terms of tax benefits, it's treated the same way whether you had a single member LLC or whether you didn't. What the LLC does, it's a limited liability company, and it's going to protect your personal assets from the business assets. And so it's going to grant you that separation of self from the business. And so it's going to give you the legal protection that you need, provided that you do everything that you're supposed to in order to keep the two separate. So some things that people don't realize is that in order to keep them separate, you have to be separate the person from the business. And so commingling is something that you want to get a grasp on right away, because commingling, what that does is it's if you're paying for personal things with the business card, paying for the business stuff personal, you basically are not having a separation of self from the business. And so you basically are telling the world that you don't think the business is separate from you, which might not be a problem because there is something called sole proprietorship. That's where you do business as yourself. And so you don't separate yourself from the business in that sense. So there are certain instances where that happens. However, the issue comes into play is with risk. So should you be selling widgets and somebody gets hurt from your widget and litigation now comes into play, you now have opened up your personal assets to this whole litigation that is open to you. And so that's why an LLC does protect you, but you have to be following the rules to keep yourself separate from that single member LLC.
Yeah, you're definitely right. And in regards to that, I know mostly when they start out, the first thing that comes to mind is not to go and get LLC. So they do start funding their business or their side hustle through their personal account. So how would you address that? Because it does get sticky in terms of tax season, in terms of trying to make sure you have this different receipts. So is there an app or something you recommend to people if they do start like that?
Yeah, so I tell people as soon as you are taking the steps to separate yourself from the business, that's when you need to take the steps to stop commingling. And of course, when it comes to commingling, you can't go backwards and fix it. So you can't change that you actually did pay for something from this account when it should have been paid from this account. What you can do is start from this time, this day going forward, and make sure that you stop now, because at least you can continue and make it right going forward. So I would just let them know, like, know what your goals are. And once you set up the LLC, go full, go full with separating yourself from the LLC. Like I said, sole proprietorship is a business entity structure in itself. So there's nothing wrong with you doing business in your own social security number, um, and being a sole proprietor. But once you open the LLC, take the steps to make sure that you're running it correctly.
Okay. So what, I guess my question is that, what are some key things in terms of running it correctly? So, when you do file taxes, it doesn't look like a red flag.
Yeah, so red flags are special terms, but what I tell people is to get used to cloud-based accounting. So have a system, there's QuickBooks, there's Xero, Xero. Have a system that's going to be connected to the business account, that all of the transactions that have to do with the business are going to flow through your cloud-based accounting system, and that's going to be separate. Once you open the bank account for the business, only use that card for the business so that you're not commingling. So get used to only keeping what's for the business for the business. Make sure you're taking pictures of your receipts. So snap a picture of your receipt, write what the receipt is, and then snap the picture so that you have the cloud-based version of that, because receipts are going to fade and you want to make sure that you have all of your deductions when the time comes for them. I like to tell people, so to actually file your tax return, you don't need the receipts. So nowadays everybody e-files, but you do need to have your receipts. Should you get audited, should you have to substantiate those deductions, you need to have your actual receipts in that sense. In that case, you want to make sure that you're keeping track of them and that you're storing them. A little trick that I tell clients is create an email that's just for your receipts. So receipts@widgets.com. And every time you snap that picture, email that receipt. So you're going to have the subject line, you're going to have the receipt attached, and right there you have like a filing system of everything that you're going to need for those receipts. So that's like a quick, easy thing that I think people can do that they probably just don't think to do.
You're right. So I have one more question in regards to this topic.
Yeah.
Because usually when people starting out in regards to business, business don't necessarily make profit. So it's still a sticky thing where they still have to like transfer money from their personal into their business. Is that like I guess something that shows like a red flag, or
No, so the funding of the business is not going to be a red flag, but there are different ways that you can handle the funding. And that's where it comes important to be working with an accountant or working with somebody who understands the bookkeeping, because you can fund the business through equity and you can be investing in the business, or you can fund the business through debt. And so you can be loaning this money to the business with the expectation that it's going to be paid back once it starts generating profits. So you want to make sure that you understand the difference between the two and where the items are going to be recorded. Because one's going to generate a payable, one's going to generate equity, and what's going to happen when you have to pay the money back. So you want to make sure that all of that is documented so that the accounting is correct. But funding the business is not typically a red flag. It is recommended to try to fund it in the least amount of times. So you don't want to be sending $100, $150 every week just because you weren't calculating. If you can, and you're going to fund it with the $5,000 upfront, and then that's what the business is going to use to function. If that's something that you're able to do, it just makes your accounting a lot easier as well.
You're 100% right. You're definitely right. So when do you go from an LLC to X Corp?
So that question always requires a consultation, because I'm not one that's going to say when you hit X amount, you should be going to an S Corp. S Corps involve very specific tax implications, and it's going to depend on your situation. So when you are a single member LLC, you're not able to take a salary. So what you take from the business as a single member LLC is what we call draws. And so that reduces the equity of the business. So it doesn't reduce your net income. So you're not able to take a salary per se and reduce your revenue by that salary. So it's going to reduce your equity in the business. When you become an S corp, you now have to take what we call reasonable compensation. So reasonable compensation is actually salary. So that's you running payroll and collecting payroll taxes and remitting payroll taxes to the government on behalf of the employee. You have to take payroll, and then anything that you take above reasonable compensation can be taken as tax-free distributions. But you have to realize that there's now separate compliance. So an S corp is going to be a pass-through entity, but it also has its separate filing requirements. So you're going to have to file an S corp tax return as well as the pass-through that's going to go through your 1040. So you now have separate filing requirements, and the owners of the S corp have certain stipulations. So you have to know who the makeup of the owners of the S corp is, if it's going to be anyone besides yourself. So it opens the door to a lot of other things. So you do omit the self-employment tax from when you're a single member LLC, but you do now have to pay payroll taxes. So it's just understanding your specific situation to know when is the best time. But it's obvious, it's definitely a great time if your business is profitable and making money for you to set up a consultation with a tax professional so that they can see your specific situation to let you know if you should be an S corp or if that's not something that you need to consider right now at all.
Right. And I just have one question. Does partnership affect anything in regards to taxes in terms of business? Does people like to partner with family members, friends? Does that truly affect, when you go in to file for taxes?
Yeah, so a partnership is going to have its own separate tax requirements. It's not going to generate a tax liability because what the partnership does, the partnership is not taxed at the partnership level. Each partner is taxed. So the partnership is going to generate what's called a K1 form, and that K1 tax form is going to go to each partner based on the percentage of ownership in that partner or however the partnership agreement was created of what ownership each partner gets, and they're going to get the K1 and then they're going to be taxed at the partner level. And so the K1 is going to pass through to their 1040, and that's where the taxes are going to be assessed. So it's going to have tax implications, but at the partner level. So the partnership is not going to actually pay taxes, but the partners will. But the partnership, just like the S corp, it's going to have to file what we call an informational return, where that informational return is a separate tax return altogether. So it has to file its own tax return, and then each partner is going to get the K1 to file with their tax return.
Oh, that's great. That's great. Now back to the individual thing. I heard this once, but I guess I'm gonna ask you this. Getting a return back on your taxes is not necessarily a good thing. Could you explain more about that? Because usually people get tax returns, like, oh my God, I got an extra $5,000. But like the way I was explained or I learned is that was money that you should have gotten during the year, right? But for some reason you didn't.
Yeah. So what at the beginning, when I was talking about the W-4 with withholdings, this ties in to that exactly. So if your withholdings are wrong and you're withholding too much throughout the year, so that means every paycheck that you get is lower than it should be or than it could be because you've withheld too much. So the government gets their withholdings when your employer sends it on your behalf. And then when you true up your taxes at the end of the year, when you file your tax return, it's determined that you are due a refund because you had too much withholdings taken out. What that means is that $5,000 in the example that you gave, that $5,000 is your money. It should have been yours the whole year, but the government held on to it for the whole year because you sent it to them through your withholding. So they held on to it and they're just returning it to you. So what a huge refund year after year, it might signify if your refund is not generated because of a credit. If your refund is only generated because you withheld too much, that just means that you're giving the government a tax-free loan because there's not going to be any interest on it. They're just going to give it back to you. There's no interest. They're just giving back the money that's yours. And so you let them hold that interest-free loan for the whole year when you could have been doing more with it throughout the year. So so it's a caution to people that get refunds year after year, but it's not due to a credit, that's something that you want to consider. So you want to double check your withholdings on your W-4 to make sure you're withholding the correct amount so that you aren't getting huge refunds that could have been yours throughout the year. And inversely, the same thing could be said for someone who is constantly owing money at the end of the year. Like whenever they file their taxes, they're constantly owing money. Something that they can probably do is adjust their withholdings so that the correct amount gets taken out every paycheck so that they don't have to owe that all that amount when the end of the year comes when they have to file their taxes. So it goes both ways, but most people don't realize that what a huge refund year after year actually means is that the government was just given that loan interest free and they're just returning the money to you.
Yeah, when I learned that, I was like, wow. I was, but not, yeah, being that said, talking about filing taxes and making sure your withholding is right, how often should someone pay tax? Should it be quarterly? Should it be from every paycheck? What's like a recommended, or does it differ based on different situation, whether you're employee to actual employer?
Yeah, so that's a good question. And so I like to tell people in these parallel situations. So the government works on an earn and pay system. So you earn income, they expect you to pay your fair share of taxes. So tax time comes around only once a year, but that's not the only time the government is collecting tax funds. And so it's earn and pay. And so quarterly is when the government is really getting these tax funds. So there are two kind of houses to look at. When you're an employee, your employer is responsible for submitting that on your behalf every quarter. So every paycheck that you get paid, those withholding taxes that come out, your employer is taking those and then they're submitting it to the government every quarter. So that's what happens in the employee side. When you're now working for yourself, you're a contractor, and so you're your own boss, you're still responsible to submit those tax payments every quarter. And a lot of small business owners don't realize that. But because you come from the employee side where it was being done for you, now the onus falls on you. So you're still required to submit those estimated quarterly taxes, but now it falls on you. So you need to know what you should be submitting estimated quarterly. And so who's going to submit estimated quarterly? If you owe $1,000, if you owe $1,000 at the end of the year, that is the indication that you should have been submitting estimated quarterly taxes. And so you can submit it based on, there are a couple ways you can do it. So if you don't know what it should have been, look at what your tax liability was last year and submit 100% of that. So if you submit what you owed last year and you divide it by 4 and you submit that over the 4 quarters of the current year, then you should be fine and not have any interest or penalties on not submitting your estimated taxes.
Oh, thank you. Thank you for the explanation.
Yeah.
So being that said, I'm sure as a CPA, you go through a lot of challenges in terms of trying to explain taxes to people and the different things that people come with you. So how do you go about handling these different challenges that you face, situations to situations?
Yeah, so I think, so when it comes to like clients coming and asking questions, I think what I do is just try to explain it how I think it would be best received. So I like to break things down. I like to do parallels a lot so that I think a lot of people understand one side, so they might understand the other side. And so, like I just gave you the parallel explanation about estimated quarterly taxes and how it looks from both sides. The same thing is with W-4s. That corresponds to your W-9. So when you're on the business side, when you're hiring contractors, you want them to complete a W-9, just like when you're an employer and you have employees, you want them to complete a W-4. And so I just try to put things in parallel so that people can understand it that way. And I just try to break it down. Like the tax code is extensive and people don't know what they don't know. So I try to take topics and just break them down into little bits and bites that I think people can understand better.
Wow. That's pretty good. You're doing a great job at doing it right now.
Thank you.
So being that said, how has your faith, in this journey, being a Christian, help you helped save people money on tax on a yearly basis for the past 13 years? Like, how has that helped you consistently be patient, you know, and just use your wisdom basically to help understand that people learn in different ways?
Yeah, so I think it's probably in me with everything I do. The foundation scripture that I use for my business, because I have a goal to save my community $1 billion in tax savings, and that's what my hefty goal is that, like Proverbs 13:22, is that every man should leave an inheritance to his children's children. And I really think that it's only the lack of knowledge that people that look like me, they just don't know what they don't know. And so I use that to just bring them information. So many times it's not even that it's difficult, it's just that they didn't know. So a lot of things that people in my community, they don't understand that's there, that it's written into the tax code to help them, but they didn't even know about it. So literally just hearing about it and just telling them about it is enough for them to take action and go implement it. So it's really just about understanding that some things are just kept from us, and it's now just to bring it to us and bring it to the community so that they're able to implement it. It's really not about me knowing everything or me knowing more than them. It's just me understanding that they just didn't learn this yet. And so it's just to teach it to them.
Oh, that's great. And I like the fact you brought that scripture, a good man leaves an inheritance for his children. So being that said, do you think, I guess as minorities, a great way to help close the wealth gap is to like, understand taxes and the different loopholes that, we can benefit from?
So I definitely think that there are a plethora of ways to reduce the wealth gap. And I think my gift is just understanding taxes and seeing how the tax puzzle changes from situation to situation. And so that's the route that I go. So I want to help close the wealth gap by understanding the tax code. By no means is that the only way for us to close the tax code, the wealth gap, because I know people killing it in the investment world. People like they are doing the stocks, they are doing the trading, and so that's definitely closing the wealth gap. I just think, from my perspective, that's what my gift was: is understanding the tax code and knowing it and being able to have a scenario and being able to explain how it impacts your bottom dollar and how you can save more money. Um, I guess that's how I see it. So if I can help you reduce your tax liability, then you can save more funds that way, and then you can go to the next step on what to do with those extra funds. And that's where the other stuff come in.
That's definitely great. That's definitely great. Another question I had just to go on this, oftentimes, like you said, people don't know what they don't know. And a lot of people go years without filing for taxes, not knowing the consequence of of it. So is there any major consequence besides just having backlog of taxes, just having to file, and there's more to it?
Yeah, so there is a lot of stuff that can happen by not filing your taxes. So not filing your taxes basically is going to let the government think that, well, maybe they forgot to do this one year, so I'll do it for them. And so they're going to file, in some cases, the government can file a tax return on your behalf based on information that they have. And when they file that tax return, it's not going to be all encompassing, right? It's only going to be based on what they know. And typically the government has the income side. And so they're going to be filing a tax return on your behalf based on income sources that they have, where they might be missing deductions or credits that you are entitled to, but they're not going to be doing that. And so not filing your tax return opens the door for them to file it on your behalf. And once it gets filed on your behalf and a tax liability is generated, then you're on the hook for the interest and penalties that are accrued on this amount. And now, once you have an outstanding liability, they can come after you for collecting on that. And so, what that looks like is it can be wage garnishment. If you have property in your name, it can be putting a lien on those properties. So, there are different ways that they can try to collect. So, it's definitely recommended to file your taxes and to make sure that you are abreast on what your tax situation is, so that you can make informed decisions on how to proceed with tackling your tax debt should you have an outstanding liability.
Wow. That makes sense. I never understood the tax land properties, but that definitely makes sense
Mhm.
now. So being that said, I know you have a community where you help teach people. Could you speak more about your community and how people can join your community if interested?
Yeah, so we have a community where it's just called Live Financially Savvy, and it's a free Facebook group, and you simply log on. It's livefinanciallysavvy.community, and I do monthly trainings in there on different topics. So we did a training on bookkeeping, we did a training on tax strategy. So we just do different trainings every month, and it's a free training for the community. We are in there every day, so you can ask your questions. People ask questions about different topics that entail taxes, and we answer the questions. And so you have access to me more on like an intimate basis because I'm actually in the community, in the Facebook community myself. And yeah, so we just try to get a little bit more involved in the community than we are in social media. Social media is really just the posting and the engaging that way. But yeah, so if you guys want more information on taxes, you guys should join the community because we have a lot of exciting things coming out. So we have courses, we have a membership program that's going to start that's going to be geared towards specifically tax strategies and how to actually implement the strategies so that you can save on your tax liabilities and understand the different strategies that you're implementing. So we go through that. So yeah, we have a lot of stuff coming out. So that's exciting.
That is. I want to quickly speak about your goal, of helping the community save $1 billion in taxes. Um, yeah, like basically how like you have a step, like the different steps you put into process of accomplishing that goal.
Yeah, so when it comes to taxes, I like to be proactive. And so a lot of the things that I talk about are ways to two ways. So ways to reduce your tax liability. And that comes from being proactive. That comes from having a tax plan in place so that you can implement the plan to reduce the taxes that you're gonna have to pay at the end of the year. So we are heavy on tax strategy, and that's one of the ways that we save our clients. And that's one of the ways that's gonna add to the billion. And the other way we wanna help our community is by actually helping them with current tax issues. So if they're dealing with current tax debt, if they have several years of taxes that they haven't filed and they're getting notices, we want to help them with that situation where we can help see what their tax situation is and what we can actually help them reduce anything if possible. And that's going to help lead to the billion in savings that way. So if we can help get rid of some of their tax debt that way by helping them solve their tax issues, that's the other way that we work. So overall, we've saved our savvy family, like we call them. That's what we call our clients. We've saved them over $4 million so far. And so, yeah, so that's my like lifelong goal is to save them $1 billion in tax savings, and
How many
so that
is-
they can build wealth.
That's really good. And how many people is that gonna take?
It really depends, but my goal is a billion, and I'm hoping to work with 1,000 clients. So we'll see.
Wow. Nah, that definitely I like that goal. I like it. It's achievable. It's
Thank
definitely.
you.
So being that said, where do you see yourself in the next 5 years? As accountant, as a Christian,
Yep.
just in life in general.
So that's funny because I had a meeting with my staff. So in 5 years, I definitely see the Savvy Accountant firm being a name that people recognize as a Black CPA firm that is saving their community tax dollars. And so in 5 years, I hope that my staff has grown and that we have different locations. So right now we're licensed in Florida and in Texas. And so we want to have different locations. And the overall goal of saving our clients $1 billion is well underway. So,
So are you looking forward to like franchising your little savvy
so I don't
account?
know if it'll be franchising as much as just expanding. So just like, KPMG and the big fours are right now. kind of in that sense.
Okay. So I definitely want to say thank you for your time, breaking down a lot of questions that people may have had in regards to taxes. And I hope people use all this information to help themselves save taxes so we can reach this goal of $1 billion of saving the community. Being that said, do you have any closing words, any motivation words you want to leave with the people?
So in my line of work, I like to tell people that they need to give themselves grace. I find a lot of clients come to me because they've ignored notices. They think that they're so far behind and they think that the situation is very dire. They need to give themselves grace and understand that every situation is figure outable. We just need to understand what's going on so that we can create a path forward. So I just want anybody listening who thinks that their situation is too dire, that they've gotten an outstanding number of notices that they've ignored, so they think that it's too late. It's really not too late. So you can reach out, you can speak to somebody who can help you and get your situation taken care of.
And where can people find you? Stay in
So,
contact.
yep, so they can find me across social media, The Savvy Accountant, SAVVY, and I'm pretty much across the board as a Savvy Accountant, so they can find me that way. I'm mostly active on IG, but I'm typically on every platform, but that's where you can mostly find me.
Not a problem. And thank you again, Mr. Tia Brown. And for those who are listening, like always, please use this information and go and apply it. Save yourself some money this tax season. And if you guys haven't yet, you guys can go and download my free study guide that show you how you can get started in the stock market completely for free at wealthandchristbrand.com. And stay tuned for next week's episode.